Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news all about the state of the world's factories. Globally, manufacturing stabilised in November with a rise in new orders. First up today, there were two factory PMI surveys out for the US for November. Both reported their sector contraction eased noticeably. The widely watched local ISM version reported that new orders are now back expanding, even if the overall sector isn't. They also found that customer inventories are currently too low, so that could well indicate an expansion is on the card soon. And the internationally benchmarked S&P Global Market version was upgraded from their flash report, showing similar improvements in new order levels. In Canada, their factory sector expanded with its strongest result in nearly 2 years. And the same survey of Japanese factories wasn't as positive though, and they reported a slightly larger contraction in November. In China, the private Caixin factory PMI was noticeably more positive for November than the official version. New orders drove that improvement too, and they were led by new export orders. And still in China, their 10-year government bond yield has dropped to 2%, a multi-decade low. Modern records for this paper only go back to 2002, but it is easily the lowest since then. The fall comes amid expectations of expanded stimulus from the Beijing government to support their economy, but expected announcements haven't surfaced so far. And there's quite a bit of data released in Australia yesterday. First, their building consent data for October rose, but only because of a catch-up in apartment consents, but it was a big jump. Consents for houses continued to slip, however, but they have had overall rises consistently since the start of the year. On the retail sales front, Victoria, Queensland and South Australia saw good gains, but retail sales gains in New South Wales and Western Australia were weak. However, it seems their Black Friday sales were quite positive, giving retailers their hope that the run to Christmas will be a better trading period. On the factory front, their internationally benchmarked November PMI contracted at a much slower pace in November, hardly at all, which counts as an improvement for them. The US Treasury 10-year yield is now just on 4.18% and unchanged from yesterday. And the price of gold will start today at $2,640 an ounce, and that's down $9 from yesterday. Oil prices are 50 US cents lower at $68 a barrel in the US, while the international Brent price is $1 lower at just over $71.50 a barrel. And the Kiwi dollar starts today at 58.8 US cents and down 50 basis points from this time yesterday. But against the Aussie, we're up 20 basis points at 91 Australian cents. Against the euro, we're unchanged at 56 euro cents. That all means our trade weighted index starts today at just on 68.4 and down 20 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.